Hello, everyone. It gives me great joy and pleasure to introduce our guest today. He is a prolific columnist and commentator. His column Swaminathan has been appreciated widely for many, many years now, and he's a highly respected voice on economic policy, business, and finance. Of course, all of it peppered with good measure, with governance, with foreign affairs, and with politics. Mr. Swaminathan Aiyar, thank you so much for joining us today, and thank you for hosting us in your lovely house. Mr. Aiyar also, he was the India correspondent for The Economist for 2 decades. Right now, he is a research fellow at the Cato Institute, which is based in Washington, D.C., and he's also a consulting editor for the Times Group. We're also joined today by Bidisha Bhattacharya, who is the print's go-to expert on all things economy. She is an exclusive columnist for the print. She's also an associate fellow with the Chintan Research Foundation. Today, Bidisha and I will be speaking to Mr. Aiyar and try to draw from his vast knowledge of the economy and his experiences over the years. Mr. Aiyar, to set the table right off the bat, I'd like to ask you a very obvious question, but a question whose answer changes on a daily basis almost, which is what is Donald Trump doing to India? Is he a friend? Is he a foe? And what's going to happen? What is the future of the India-US ties?
Trump.
Yeah.
All I can say is that Mr. Trump is unquestionably for America and for himself. The notion of whether he is in pro-India or pro-Pakistan and all this is rubbish. He is pro-USA. He has made very clear what his agenda. In some ways, you might cynically say he has cottoned on to Atmanirbhar. So he is trying to do for America what in some sense Mr. Modi has done. Mr. Modi, Atmanirbhar, he says we want to provide for ourselves. And when people say, but can you just be inward looking like the license permit? No, he said we will export also.
Right.
So he loves the idea of China that we have a trade surplus with everybody. We don't import, but we export, is Mr. Modi's idea. And it's very much the RSS, SDM, Swadeshi Jagran Manch idea. That is the kind of thing. Funnily enough, just like Mr. Trump. Mr. Trump says, I don't want a trade deficit, bilateral trade deficit with anybody. Just as in some sense, Mr. Modi is acting against the same thing. So you have this nationalist inward turning. In Trump's case, the turnaround is enormous. In India's case, it is not that much because we were never that keen on FDI. We never got that much for many reasons. But the United States was the leader, the champion of the liberal opening economy. It created this hegemonic state, which means it was able to more or less lay down and enforce rules for opening up. And for the last 70 years, it was led to unprecedented global prosperity, American prosperity, Indian prosperity, Chinese prosperity. But in all this, suddenly they discovered that, beyond a point, what we are doing, frankly, is deindustrializing.
Right.
Because, if you say that, what does it take to produce steel, aluminium products, furniture, cameras? And a low-labor country, a low-wage country like China can do it much better than America. So America was the father of automobiles and now is also run. It was the father of radio and produces no radios. It was the father of television. It produces no television sets. So it has, in this particular area, China has come up and become the factory of the world. And the way China rose was, if you like, a bit like Dhirubhai Ambani. He would create a very large capacity of anything, far in excess of what was needed, export, saying that domestic demand will catch up. As it was catching up, then he would build another. Unlike Mr. Adani, Ambani used to go for a new public issue almost every year in the 1980s. Cut. He constantly needed more and more capital. In fact, I am amazed that Adani does not need more and more equity capital also. But that's the way he did it. China has been playing the same game. They create a large capacity and they say we will sell abroad, and then domestic capacity will catch up. So whether it is Mr. Ambani or whether it is China, the game works as long as you are a relatively small producer of the world production. But when you are almost have half the steel capacity of the world, and if at that point you are expanding, in effect, you are killing industries everywhere else. And that nobody is going to. I mean, in some sense, people have almost been taken aback by not noticing that something strategic is going on. That by deindustrializing, we have, if you don't have friendly geopolitical relations, suddenly you have exported your industries to an unfriendly country or a country that is determined. I mean, they are passionate about it, that we are going to be number one in the world. They are very clear. They are passionate. China is very clear. We have the men, we have the technology, we have the capital too, and nobody is going to stop us. And suddenly, this is being seen as a geopolitical threat, and everybody else is reacting both on the security side and on the economic side. I mean, you got a situation in Europe right now. The EU is putting up a 50% tariff almost against Britain. I mean, everybody is saying, oh, I need a steel industry. We never thought about it before, but now China, with what China is doing, and India in a very small way, the most basic things are going to disappear. It's very funny to see Tata Motors begging for money from the British government more than it ever begged from the Indian government to keep its steel furnaces in Britain going. So I'll say I have wandered on a large canvas, but Mr. Trump is going to, because he's on such a different tack, he is determined to push this through, and this means that the negotiations going on right now, everybody thinks we will have a negotiation and things will settle down in November. Anantha Nageshwaran, our chief economic advisor, thinks so. Please, this particular Mr. Trump is going to hit you year after year after year. Whatever is happening this year, please do not think of this as something which is going to come to a final settlement. They're going to hammer you, because what he wants, the notion that America must have a trade deficit, must have a trade surplus with everybody, that is only possible if America has a saving surplus. Here is this country who is woefully deficient in savings. Therefore, their consumption or their investment has to be financed from abroad. Therefore, America runs a trade deficit, and the current account deficit is that high, and therefore, it is going to have a trade deficit. And how do you get out of it? The idea that all these industries are going to come back. I mean, you can, at a price, get some industries back. But who will invest in a steel plant without knowing what happens if a Democratic candidate comes in 3 years? I mean, when you're investing in these high plants, you want to know what the thing is. What Mr. Trump has done is to make everything unforeseeable. Therefore, everybody suddenly is having to drive blind. I would say the net effect is going to be a gross reduction in investment the world over, because the uncertainty is spreading to everywhere. And if you remind them, do you know that Mr. Trump is going to continue to hit you for the next 3 years, then you really say, let me be extremely cautious about investment.
Mr. Aiyar, just to follow up to that question, and it's a two-part question actually. You said recently that India should have been tough towards the Trump administration all along, right? I mean, when he was being sworn in, most people were saying that, Trump and Modi are great friends, and this is basically a new chapter in the India-US relationship. And then we all saw what happened, right? When you say that India should have been or should be tough with the US, what does that toughness look like? In what sense, in what aspect can we be tough towards the US? And another question, and this is regarding what you just said, do you think that countries across the world, including India, the EU, they're just hunkering down, trying to do what appeases Trump and just waiting it out so that basically once he goes, it can be back to business?
Okay, as far as toughness is concerned, in some sense we are being tough. We have refused to give in on the farm opening up, and we have refused to give in on the Russian exports. On the other things, frankly, it's not such a big deal. I mean, import of cherries and almonds, right? This is not going to kill you, whether it's duty free or not. So, some of the other items Harley Davidson, how much will you spend on that? And Harley Davidson itself will actually find very soon that it's better for it to come to India. I mean, if the tariff comes down to 20%, it's cheaper to manufacture here than build it there and ship it. And the shipping costs are very substantial. So I would say that there are some things that are non-negotiable, others that are negotiable. So for the time being, the November settlement, it may take place. I'm not saying it will, because I think they want to put the squeeze in India. They've made it clear this has nothing to do with the trade deficit anymore. This is geopolitical. We want to squeeze Russia as hard as I can, and they're going to squeeze Russia by squeezing India. Now, India is not giving in. Partly it's a foreign affairs thing, because we are just seeing what happens. We don't want to put our eggs in the American basket. We want to maintain our relations. Secondly, lots of people say, the difference between the Urals crude, the discount on the Russian crude is only $2 to $4. So it won't make much difference if you give it up and shift. This is stupid, because if the Russian production is such a significant production of total production, if suddenly all of the Indian demand, or for that matter India, Pakistan, if the South Asian demand suddenly shifts one day, estimate from PMO is that the price of oil will go up to $100. So we are not talking about just a difference of $2 or $4. We are talking about, and if you read The Economist, they think it will go up to at least 80. So, it's a big jump of $15 plus, and that will adversely affect us. It will adversely affect everybody else. So in these circumstances, we are, you can say, holding firm on these two things, for these two things. I would have said that you need to do something else on that by putting high tariffs. Suppose we had put high tariffs on American things. What would have happened? As far as I can say, nothing. Because he may increase the tariffs further for some time. But at the end of it all, as I keep saying, if you want a negotiation, at that end of the negotiation, if you ask that guy to give up his maximal demands, you have to be able to give something up. What is it that you can give up? Now, if I've already put 100% tariff, I can give that up. If I'm already pleading for zero and I don't have, what is it you are going to give up? So to me, toughness is required just for that alone. The Chinese said, okay, if you want to put 150, we'll also put 150%. Then they said, okay, let's go down. I think we should have followed that particular policy. On the other hand, there are people who say, just take it easy, it'll all settle down. It may settle down, but I'm just saying that we are in the position that Laos said, everything is just fine. We have 0% on all American products. Trump said, thank you very much, and I'm going to levy 40% import duty on you because you have various other barriers. I mean, this is the kind of, he is a man, as I said, you think he's a friend, so he embraces in order to knee you in the groin. It's not an embrace meant to make you comfortable. He's been now very clear about this. So, as I said, if you want to get to an end of a negotiation, you have to know what is it you want to give up.
Mr. Aiyar, in a couple of your recent interviews as well, and even the conversation that we've had so far, you've spoken about how this is not let's say that this is not the time to, go on a spending spree, because as you just mentioned, this is, don't think that this is a short-term bit that Trump is doing. This can happen the next year and the next year. But India is a growing economy right now. We need to invest. So in this uncertain global environment, how do we manage to have a macro prudence? How do we manage to have, the right kind of capital inflows coming in, the right kind of investments taking place? Should we go in that direction? Because if the macro prudence is in place, that's when we can talk about trade prudence. So this is my question to you, that if you're saying that we shouldn't spend much, we should be very tactful, um, wouldn't it wouldn't be possible for a developing or a growing economy, because we need to invest in different sectors. So what do you think?
Modi's reaction has clearly been to turn inward. He keeps saying we have to become self-sufficient, we have to become self-reliant, look at all this thing. How can you depend on other people? Now, I have, of course, been arguing for years that, you must at least, this press note 3, which prevents us from getting Chinese investment of various kinds. I'm saying this must go because China is now the biggest source of investment and technology, just as America used to be once upon a time. And to keep out this biggest source is stupid. Great Wall Company had a $1 billion investment proposal. We said no. BYD then had another $1 billion proposal, a high-tech one. Again, we said no. So, if we are saying no, the question that you are asking, the fact is that this country does not want to have large inflows. This is not the way we see our future. It's very clear that Mr. Modi says, I understand that some foreign investment, yes, I would like it here and geopolitically if it's okay. But I'm not going to stretch and strain for it. And I'm going to be very worried about geopolitics in the coming future. And you'll have to decide whether the Americans are friendly on the geopolitical side in the medium term or not. So the government reaction as of now is, and there is perfectly good logic. They say, all this Viksit Bharat stuff, that we have to grow at 8%. They said, when you are fighting the next state election, the issue is not how do I get to net 8%, the question is how do I win the next election? And if you want to win the next election, you cannot go for radical reforms. Because everybody knows you do radical reforms, it first of all creates a lot of losers. The benefits come later on. But there's no point saying the benefits will come when the opposition is won the election. So there is a huge difficulty in doing anything radical. There was this land acquisition law which Modi started with, and it couldn't get done. They left it to the states, and up to a state, some state like UP has done a very good thing. It doesn't acquire land, it buys land. I mean, there are various other things, but for acquisition, you have to not only pay, but you have 20% of the land has to be given back. You have to make compensation for all the agricultural. There are all kinds of other things tagged on to that central legislation of 2013 done by Jairam Ramesh. So there are ways around it, but still, when you see that Mr. Modi's pet project, close to his heart, was a bullet train from Bombay to Ahmedabad. He's been in power for so long. Where is it? They are now saying we hope it's by end of 2027. When you say end of 2027, it means 2028. But just consider land acquisition issues are such. And there are people who say, oh, Maharashtra was just not allowing. Excuse me, Maharashtra was ruled for a substantial part of this period by his own party. And even then it didn't get through. So, in these circumstances, what happened when he tried the farm reforms. So they say that there are so many problems when you liberalize on a large scale. Just take it easy. If your focus is in winning the next election, you have to have enough growth. But, nobody will put it that way, but I will put it, what is wrong with 6 to 6.5%? If it's 6 to 6.5%, I can keep winning every election. Then that is what I'm going to do. This is not like the Soviet Russia where you lay down a plan of 8% and it doesn't matter what the voters think. Here, first and foremost is winning the next election, winning. This has got to Modi so badly, he wants this one nation, one election to get out of this hole. But as of now, you are focusing constantly on possible losses every few months. So this is not a climate for radical reform. So they will, little bits here and there. The other few things that people don't realize, I mentioned the geopolitical thing about not wanting the Chinese, but the Swadeshi Jagran Manch, the economic think tank of the BJP, has always been against foreign investment. I remember when Jay Davashi was out there, he was very clear, we have to follow the Korean model. Why are you going for the Western model? South Korea kept foreign investment out. It got technological support from them. It created national champions, and these national champions were subsidized to a huge amount. And of course, part of that subsidy was kicked back. So you will find in retrospect that both the heads of the companies and the presidents of Korea go to jail for corruption from time to time. But the net effect was that it worked. That you built up your national champions without foreign investment, and look where they've gone. So Jay Dubhashi, when he was Swadeshi, he was very keen on this. There were other RSS guys. I have sometimes talked to them, and frankly, I don't understand what they are saying. So not all of them have that clarity of thought. But fundamentally, they want national champions. They don't want big FDI guys. So Amazon and Walmart came in and they said, we have to promote Reliance, that to beat them. Because only Reliance is big enough, or at that point of time, only Reliance is big enough. So it was made very clear that we will always favor our national champions over you. When you send this message out, which foreign investor is going to come in saying, if tomorrow Adani enters this field, I'm going to be hammered with 4 or 5 new regulations which Adani will escape. So the creating of national champions, it is not an explicit policy. We have not said in any speech that we are following the Korean model. In practice, if you look at the big three, Tata, Adani, Ambani, they get whatever subsidy, whatever land, whatever to get to global scale, to become big enough to challenge the global companies. That is the emphasis. And I think that will continue. And if this has produced remarkably 6.5% growth for so long, what is wrong with 6.5% growth? It's actually damn good when you consider the overall climate. And this is being done overwhelmingly based on domestic investment and the domestic market for consumption. This is not an export-oriented country. This is not a country oriented towards foreign investment. Overwhelmingly, it's domestic investment.
But there are a lot of discussions, sir, that are going around trade diversification, because as you correctly stated that, okay, fine, if we know that the other party is not going to make any changes to his decision or creating a world that is unforeseeable, then there's some changes that we can do domestically that might be either save us from much harm or sort of help us with the Viksit Bharat vision that we have for 2047. So which is where trade diversification is an area that has been discussed quite, across policy circles. Now, which has led to a big question that whether the future would be more structural driven or policy driven. And if we are talking about trade diversification, then should we only focus on the volume of exports or also the kind of exports, the kind of commodities, because we are also heavily investing and studying in areas of pharmaceuticals, EVs, green energy, renewables. So what do you have to say about that? Because right now the focus is moving also towards the diversifying the rules-based trading system. We no longer only talk about the multilateral trade. We have bilateral arrangements, we have plurilateral arrangements. So what is your opinion about it?
No, the government itself is attempting to do as many FTAs as possible. It has kept out of the RCEP too so far, but at some point you might even go in there. But that apart, at the end of it all, trade diversification is done by companies and not governments. It is not the government that has created the current situation, the boom in GCCs or the boom in Infosys and others. All these happened without government pushing. They happened because of the circumstances that the entrepreneurs seized. And that will continue to be the case. the trade diversification that you talk about is often, frankly, just what shall we call it? Laundering? I mean, for instance, our exports to Pakistan were stopped, our exports to Iran were stopped. At the same time, you suddenly found that our biggest export destination has become Dubai. Now you have to say, what is Dubai consuming this enormous quantities? They're not consuming, it's all diversion, it's all going to Iran and Pakistan. Similarly, some of the oil that's coming, there's a grey shadow fleet. So some of this so-called, what you may call diversification, is nothing more than the market taking care of what governments can't do. So a lot of it will be, as I said, I'm astonished that the Russians have been able to sell so much oil despite the absence, despite all the sanctions. I'm surprised Iran is able to sell so much oil despite all the sanctions. But they are. So all I can say is that just like, we once upon a time, Dubai was our biggest export destination, there will be ways around. China has done it by, you set up assembly plants somewhere and all the inputs are yours. But Trump is now getting wise to that, and he has slammed, I think, a 2,800% hit duty on solar panels being made in Vietnam and other places. So, they are getting around now to the value addition part, even in the treaty with Mexico and Canada. So they are going to, without doubt, going to move in the direction of, I want to become Atmanirbhar. That's how the USA is going. This is forcing others to look in the same way, especially if you take into account two things. One, the Chinese desire to become number one. Secondly, the Chinese overcapacity in everything, which means that they will, if you keep this selling, you will be killing a significant range of what in a turbulent geopolitical situation, you say, things are dangerous today. Can I afford to have no steel industry?
Yeah.
Can I afford not to have right now, the car industry of Germany is under threat. They will say, do we allow this to be killed by BYD and others? Or do we just put up a wall?
Well, as you said, markets always find a way. But talking about exports, most of what we export at this point can be substituted by other countries, right? And the Niti Aayog CEO recently said that whatever basically we export, the world doesn't really require in large quantities, right? That there's this trade imbalance that basically 66% of what the world is majorly importing, our share in those products is only 0.2%, right? If we are to basically export to high margin, big markets, how do we rewire our exports? I mean, what is the vision for that?
See, you keep using the word we as though there is some great planner who's going to do this. This is exactly the question that was raised by the entire left wing in 1991. How are you going to do it? You're going to open up. You're going to compete with all the multinationals. Do you know you're going to be devastated and everything will be finished? The same question was asked. And there was no government answer to it. But the fact is your entrepreneurship proved up to the mark. So that is the same thing that is going to rescue. When you say what we are supplying, there are no monopolies in international trade. There are always multiple suppliers. So we will be with those same multiple suppliers and we will manage. It can partly be done in the short term by support from the government directly, because the items on which 50% thing is put, like shrimp and so on, they say we will give you a temporary relief until such time as you can rejig your thing. The rejigging will take place, but we have to be very clear that the future may not be very export oriented for some time, at least for some time. And therefore, Mr. Modi's emphasis on saying, but you have such a huge domestic market. We're not dependent on foreign investment at all. We have a gross fixed capital formation of 30 to 33%, of which the foreign investment is 1 to 2%. So, 30% is coming from us. Only 1 or 2% is coming. We need them basically for high tech and knowledge of markets and improving quality controls, various things like that. But bulk of investment is taking place now. And you have this incredible phenomenon now of SIPs, where the middle class is just shoveling 30,000 crores into the market. And suddenly, therefore, the IPOs come up. Everybody says, this money is coming up. Manna is falling from heaven. Let us go and collect it. And I hope all that is well used. To me, right now, there are signs of a huge bubble out there. But all I can say is, look at the GDP data. They keep surprising on the upside. I mean, 2 years ago, they said the growth rate would be 8.2%. Everybody said this is too large, etc. Then the revised data was 9.2. Then the next year's thing they will say, surely be much lower. Okay. So we said, because there was a problem, let us take 2 years' data together and average. So you took 9.2 and 6.5 the next year. The average turned out 7.85. My God, we were a miracle economy. This year, first quarter, 7.4. So, all I can say is that quarter after quarter, we keep surprising on the upside. There is something within the economy, something within the country, which is really solid and fundamental, pushing up. You can do your complicated modeling to try and work out where exactly it is. But every large number of things obviously are going right at this particular point of time. I think particularly, although we have a lousy educational system, one of the things is they say, if you're producing 4 million STEM graduates a year, suddenly this is the largest pool of skilled labor in the whole world. Everybody has to come here. Nobody planned this. Nobody talked about this. It has happened. It's rather like the GCCs just happened. So, we have a lot of things just going well for us. And in some ways, because we were underachievers for so long, I think we suddenly now are surprised that actually we have very strong fundamentals. Nobody is going to be like China growing at 14%, right? But if you compare with anybody else, the other guys did 6.5% in Southeast Asia, and the Tigers did up 7% for some time. So what India is doing right now is fully on par with those people. And it is a very good rate that we have done for the last 20 years. And if you can do it for another 20 years, okay, you may not become a high-income country, but you will still have done extremely well, and you will be an economic powerhouse.
Mr. Aiyar, you spoke about how things may not be conducive for radical reforms, right? I mean, reforms in a country like India is not about economy and policy as much as it is about politics always, right? Trin Nguyen, who I was mentioning earlier, who is an Asia economy expert, came to our office the other day, and in an interview with us, she said that, India should use Donald Trump as an excuse for reforms, right? I mean, in the garb of Donald Trump. That is her opinion. And you have, of course, spoken at length and for many years about reforms, and you keep saying how land and labor basically are areas where we need to reform. What is the vision?
And capital.
And capital.
If you
of
keep
course.
saying no to billion-dollar investments, there is a problem in the capital as well.
Yeah. And when you compare India to our neighbors, basically in all aspects, in all three aspects, basically we're doing much worse. So, what is the vision for the next set of reforms? I mean, that is realistic.
There is no set of vision. That's the point I'm making. But what is happening? I mean, small incremental things will keep happening. What the hope lies in some state governments going out of the way. Tamil Nadu right now is becoming another country. It's not like the rest of India. And some of these hostels that they're putting up for women is something, which is in some ways comparable with how China started. So things are happening in Tamil Nadu, things are happening in Hyderabad, things are happening up to a point in Bangalore. All those new campuses and GCCs coming up. They say, once you go inside, you feel you are like you are in the USA. So things are happening, and not in Modi territory. This is mostly non-Modi territory. Kerala has come up in such a big way. And look at the situation. You go to Tamil Nadu today, everybody is learning Hindi. Guess why? because servants now are not available from Tamilians. All the servants are from North India. So you know, if you want to have communications with your servants, you have to learn Hindi. So this is becoming a new way of promoting Hindi. So, but you know, but these are the big, in Kerala, of course, for a long time, there is no Kerala labor. Even for the Narega and so on, there are huge numbers of people originally from Karnataka mainly and Tamil Nadu. And now they are coming from all over. Because the Kerala fellows themselves, they will not do Narega work. It's mostly the immigrant labor that's doing. So there are things that are working in India. And very much, you see, for so long, nothing was unfulfilled. And now, frankly, I think we've come to the stage where the chaebol policy, the Korean policy, it is not an official policy. But the current thing is being driven by that. Enormous investments are being made by Tata, Ambani, and Adani in new areas totally. In the old time, you know, we were very happy about more cement plant. Yeah, very simple. But to go into a high-tech new area like green hydrogen or the data centers and the solar thing that Adani is trying, the wafer technology that Tata is, these are enormous investments of the kind we have never seen. And we are entrusting it to these champions, hoping it will work out. So that is, in fact, the major thrust, if you ask me about the new growth that's taking place. The government has created the infrastructure. It has been a hugely successful thing. And even policy-wise, the ports, for instance, you were so bad at one time. I remember I was editor of Financial Express in '88. I would look out of my window. There would be a line of 20 ships waiting to get in. And it could take 27 days. And now the ship turned around at Mundra, 6 hours. I mean, just look at the change. So, you know, enormous improvements in infrastructure and practices. Instead of the ports being run by the government, now the jetties have been let out. And I think that, in fact, they're going to, some the ports themselves might become private. So many things have happened, and that infrastructure has come up, and the government support and guarantee. I mean, you may think it's a good thing or a bad thing, but they've been told we will give you enough tariff protection that you don't have to worry about being killed by foreign competition. If you screw up otherwise, it's different. But this is the way we are going forward in terms of government policy. I think we also benefited that this is such an entrepreneurial country, and the entrepreneurs were kept down for so long. And when after 1991 they came up, there was a huge problem of access to credit, access to money. Today, there is a huge access to money. I mean, if you just look at the IPOs, the way they're going out right now. So money. Venture capital, private equity, all these guys coming in. So huge amount of support to startups. We had, at one point of time, almost 100 unicorns. Maybe it's a lower number, but still. This was a poor developing country. We are hardly richer than Pakistan or Bangladesh, and we are poorer per capita terms than Sri Lanka. For such a poor country to be having so many unicorns is a feat. For such a country to even be trying to replicate the Korean model, it means something. So I said, some things very good are going on, and it is not the case that only a few cronies are getting it. It is very wide across. The second layer, you know, Birla, Sajjan Jindal, all these guys are also doing very well. Everybody is expanding, breakneck speed. Enormous investments are taking place. The complaint sometimes is that this is now leading to concentration. Right? I mean, suddenly Mr. Adani and Birla are the only guys producing cement. Out of suddenly. Indigo and Tata are the only airlines. So, you know, you're getting concentration in many places, and that is something you need to worry about in the longer run. But as of now, it has not led to higher prices. There is not a monopolistic situation.
Right. So I do have two questions. One, you spoke about the concentration bit, which is very interesting. I mean, it did take me back to an index in research that we use in international trade, which is the Herfindahl-Hirschman index, which talks about like if a market is extremely concentrated, then investors are also wary. Foreign investors also look into that market and they say, what impact can we make if we enter into the market? And then they look for other sort of areas where the HHI is moderate to low, I mean, not very high for that matter. But my question is regarding specifically exchange rates. This is something that is being discussed a lot, and rupee is falling, rupee is depreciating constantly. But it's very important to understand that India doesn't only trade with the US, India trades with other countries as well. And so I feel it's highly imperative not to take into account the exchange rate only with the rupee dollar rate, but also looking at the real effective exchange rate, the real factor, and like the way RBI calculates, against a basket of 6 currencies or 40 trading currencies. So what do you think? Because when a currency depreciates, economics 101 says it makes exports look attractive to the rest of the world. But today, with the rupee not performing at all well against the dollar, let's say, what do you have to say about this?
Or most people tend to just look at the rupee dollar rate when you talk about appreciation or not, which is just a wrong attitude.
Exactly.
So there is the basket. The RBI has the 36 country basket. And if you go on that, if you are a country that is rising, you should be appreciating. There are a lot of people who get worried when you say the rupee is appreciating a little. But I mean, if we are doing so well, actually we should be appreciating a little. So I have no difficulty with saying that in the current situation, when the current account deficit is hardly 1% of GDP, just let the market decide what the exchange rate is. You can enter if there is some excessive thing. But at the end of it all, I mean, Arvind Subramaniam and so on have complained that there is too much intervention to prop up the rupee. And I wrote that, I think that's just wrong. Certainly, RBI has intervened from time to time, but the overall forex reserves has not been depleted because of that. So I would say that they have just been managing the volatility and not much more. Some others said, no, it's Sanjay Malhotra is allowing it to slide more than Shaktikant does. I think that's reading too much into it. And at this particular point, the dollar also strengthened so much that it looked as though we were slipping, and it was not the case that we were slipping against everybody so badly. So I don't, any country which has a current account deficit of 1% has no problem. There's infinite discussion, like on the inflation rate, this Monetary Policy Commission, and enormous discussion, shall we cut the interest rate by 0.25%? Arey Baba, people are borrowing at 18%. Do they care whether it's 18.25 or 17.5? They don't care. For most people, there's a small bunch of guys for whom this will translate into an effect on bonds. The big money people, for them it's important. For most people, it is not important. And so basically, I would say the country is moving along without requiring any great reforms. And therefore, why rock the boat? If it ain't broke, why fix it? So, if you're getting this 7.5% growth for the last 3 years, why on earth should you change it and risk losing an election? So, we have done fantastically well in the period when all your neighbors went bust and went to the IMF. I mean, it just gives you an idea of the difference. Back in the taper tantrum of 2014, we were one of the 5 most fragile economies. Today we are one of the most pakka economies. Enormous difference that has taken place. So all I can say is that something is happening. There is an energy that is rising and providing an upward boost. It is not central government reforms. Some southern state government reforms, yes. But at the end, overall, it is the internal thing that is rising. Entrepreneurship is getting a big hold. plus the big boys, the chaebol, are getting a big hand from the government. This is pushing you forward, along with very substantial public investment in infrastructure and other things which has been ahead. So we look to be on a very good wicket right now. So I don't think anybody wants to rock them. So when people say take advantage of the Trump thing to do big reforms, who cares about? They say I have to win the Bihar election. We are not worried about Trump. The idea that we are going to do great reforms because of Trump, I don't see how. You see, a lot of people say that there is no time like a crisis to reform. This is no crisis right now. 1991 was a time when you had to reform in various ways and you could do it. Where is the crisis today? Whenever the next GDP figure comes out again, you're about 7%.
But you know, most of the reforms and the liberalization over the years, I mean, for decades now, we've done very grudgingly, right? I mean, I mean, we basically sometimes are essentially forced into doing it. You think our approach has been right?
Nobody's been forced to. It's just that you have moved grudgingly at your own pace. And this has often meant one step back, then 2 steps forward, another 2 steps back. That is, some areas, nothing happened at all. I mean, land is substantially still very, very difficult. Labor reforms, which is the biggest trade union? BMS, it belongs to the BJP. How can a Labour party go around and say, I'm going to abandon labour laws? They will be in favor of the toughest laws. So as far as the unions are concerned, official labour is concerned, how many perks have been taken away? If you go to America, many companies will give you 1 week leave, 10 days leave. Here, most people are getting 30 days annually, plus 15 days sick leave, plus 15 days casual. I mean, something like casual leave, they are amazed. They say, what is this creature? And yet it's built into the structure and nobody wants to give it up. So the moment you shift from the unorganized sector to the formal sector, I mean, look what happens. The actual cost per employee shoots up and there's the reluctance to get rid of anybody, including, I mean, this is the worst in the government and public sector. My wife's elder sister and brother-in-law were both in government service. And after some time, they decided, why go to office? We'll start our own business. They continue to get paid and collecting now 2 pensions for doing no work. And nobody thought of sacking them. It doesn't exist. So what do you do with this kind of thing? All that you can say is that there is no effort to actually rein in the labor excesses. So you still live with the current system. And there will be some people who can afford high wage and still be competitive. So we are not going to get anywhere, if you ask me, on low wage industries. On the high wage, high skilled industries. So, you know, if you go into auto, if you go into pharma, if you go into specialty chemicals, solar, various things, we will be able to do it because our labor is competitive there. It doesn't matter there how many days leave you get. But at the lower level, the kind of perks that you give, the unorganized sector may be competitive, the organized sector will not. Because you suddenly shoot up the price by, I think, maybe 100% as compared to... Now, of course, people have got over it. There are a large number of people who are just hiring casual labor and not hiring regular labor. So there are various, as I said, the market finds various ways around this kind of thing. But nevertheless, we have created hurdles, and the BJP being a Labour party, it's not a just a right-wing party. As a Labour party, it is not going to change the rules of what I call the Labour aristocracy. The Labour aristocracy will continue to do very well while unorganized Labour has a bit of a slog. But this is proving okay till now. There are some people who say, you know, Nepal was supposed to be okay until they invaded the presidential thing. Same with Hasina, same with Gotabaya in Sri Lanka. Will that happen in India? It seems to me very unlikely because we are not basket cases like they were. I think there is enough positive thing going here to prevent an explosion. Without doubt, we are creating vast number of unemployable graduates. They have a piece of paper, but no real skills. And it's very difficult to know what to do with those people. It is a problem. And will they invade one day? Nobody can say. But as of now, we look safe from that. We do look as though there is enough going that we can continue to be a miracle economy. You're not going to get to 8%, this Viksit Bharat target, because nobody is keen. Everybody will pay lip service to that, but it is not what drives politics. What drives politics, frankly, right now is which is the next freebie. Which woman's study program or which woman's education program or whatever, give it to women or find various ways. Because they believe this is what wins elections. The focus is not on how do I improve this, how do I make India competitive.
Mr. Aiyar, I know we're short on time. I just have two more questions, and then Bidisha, if you have any, you can maybe get right in. You were talking about IPOs, right, and big money being pumped in, and you're talking about a possible bubble. In the last 1 year, the markets have largely remained flat. It's more or less, there've not been major deviations through the year, and they're basically, essentially, you can say that there's been 0% returns. Where do you think the markets are headed, and what do you have to say about this phenomenon?
Markets being unpredictable. Either I can make so many predictions that it doesn't matter if some are wrong, otherwise I shouldn't make them at all. There is a chance of a market collapse. Certainly in the USA, everybody is saying, look at the inflated values. Everything is ready. There is a huge bubble. Jeff Bezos says, yes, it's a bubble, but it's a nice bubble. And when it bursts, some guys will be out and others will do well. So there is a bubble, and yet there is this famous phrase of Mr. John Maynard Keynes: markets can remain irrational for longer than you can remain solvent. So anybody who tries to time when is that bubble going to burst, we have no idea. Certainly there is a bubble. Certainly valuations are very, very stretched. And in the case of India, this SIP thing, the middle class is just blindly pouring money into the market. Now, in some ways, it's a very good, solid thing that, you have the same. But if there is a huge crash, I hope SIPs will be strong enough to survive that, and that whole thing does not collapse. So far, we have done so. It has managed, and so I would say that the Indian market is overvalued. I would say we are in a bubble, but the rest of the world is in a bubble too. And if the American bubble does not burst, maybe our bubble will not burst for quite some time. So, at the end of it all, as I said, if you keep complaining that the market has been irrational for 5 years, the question is, what is the definition of rationality? We have a situation, so Ruchir Sharma keeps writing, we got to a stage, he says, where at the drop of a drop of a hat, governments are intervening or central banks are intervening to keep pushing money. Nobody wants to see anything go down. So he says, in effect, we are having serial bubble creators.
Last question from my end, and then I'll hand it over to Bidisha. What is the one good thing, if there is one, about Trump's economic policy? And this is not from the American perspective, but the global perspective. What is the one good thing about his policy, the current economic policy?
Oh, I could say several. He has driven home the notion that, why should America just be spending on the defense of the whole of Europe, the whole of Japan and everything? There has been a huge effective subsidy from America for the rest of the world on security. So at this particular point, if you say, why is Europe unable to defend itself? It's because Europe has been very, very indiscreet. They just haven't spent. The idea was that we have no enemies. So, that so-called peace dividend that we got after the end of the Cold War, a lot of it has depended on the Americans. So what he's saying is, I am supplying international public goods without anybody paying for it. And he's right on the security side. So Europe will have to pay much, much more. Korea, Japan, India, Southeast Asia, we will all have to increase our defense. So that is a relevant part of what he has raised, that I'm not going to supply public goods anymore. The other thing he has raised is, and maybe others have raised it also, that there is an issue of Chinese overcapacity being a problem. He says that China is now frankly a foe. And in some ways, he has brought reality to everybody. This China that is determined to become world number one, it is not just a trading partner. There are going to be geopolitical consequences. And you need to say that the peace dividend is over. And from that point of view, this is how India is justifying the fact that it rejected billion-dollar investments from BioID and Great Wall of Company. It says we don't want any investment from the Chinese. We don't know what to do. I'm told that there was a case of Chinese equipment in some hospitals, transmitting hospital data back to China. And the CEOs, when questioned about it in China, they said, you are right, but we've been asked by the government to do. Now, sending some hospital data, if you ask me, is not a serious thing. And there are other people who say, if you allow BYD in, the sensors will catch it. I say, how does it matter if anybody knows where all I'm going? The fact is that already Chinese equipment, I mean, I have my Xiaomi television, people have mobile sets, washing machines, refrigerators. So we already have all those. So to me, this is a very poor argument that, if you allow some more Chinese things, they will become transmitters of data. But I will say that there are some areas like telecom and so on where you do have to be careful. The fact is that we are already hacked and penetrated left, right, and center today. It is not an area which people focus on, but anybody I speak on in defense, they say that we are totally vulnerable and we need to pick up on all these things as well as the hardware. They say, what you've got is pathetic. If there's an actual war, if there's an actual thing, just like they will have to increase this defense spending, I think India will have to do it. Southeast Asia will have to do it, Japan. So the fact that there is a security issue has been put out by Trump, and he's correct. The overcapacity of China absolutely killing somebody, he is correct. So on some things, he is correct. Now, on the business of bilateral deficits, he's crazy, completely stupid. The idea that, to have a trade deficit means it's unfair trade. So, as long as they have this huge shortfall of savings, they are going to have a trade deficit. It has nothing to do with unfair action by others. It is simply insufficient savings within the USA itself. So some of that stuff is crazy. And he's doing some dangerous things. He's blown up 4 boats in the Gulf. It almost looks as though he's going to invade Venezuela. Yeah. So, the kind of red lines are beginning to change. And I have no idea what happens if this. Of course, Russia has done it too. First in Ukraine, and now you're beginning to have some drone penetration of Scandinavian companies, of Poland. I was coming here via Lot Airways, and they closed down all airports for a day or two. But fortunately, my plane was ultimately able to get through. But I said, I never dreamt of these kinds of issues before. But the world is becoming a dangerous place. The world is becoming an inward-looking place. The world is going to becoming a place of slower growth. And within all this, India is one of the few countries that seems to have the internal large market skills, resilience to do reasonably well. I'm sure, according to calculations of Swaminathan Aiyar, our GDP will come down by 0.5% because of the American tariffs. And this is back of the envelope calculation. But as I say, if you think you're going to do 6.5 and you do 6, take it. This is not a crash, this is not a crisis. In fact, everybody would say, you've done so well to do 6% in this kind of climate. So all I can say is that India's economic performance the last 3 years has taken me by surprise. I was not a great optimist. But the data keeps surprising us on the upside. So something is very solid and resilient. about what we are doing. So I would say, we should be cautiously optimistic that the global conditions are frankly very negative. Especially if you get into the situation now where they're going to invade Venezuela. I mean, everybody everywhere will say, I will also invade. I mean, the old peace compact is just getting broken. So Russians have gone in one place, the guys go in other. I don't know who else will invade who. I mean, I was astounded to find that there was a shooting war between Laos and Thailand. And Trump had. So, these things didn't happen earlier. So, many wars are kind of breaking out all over the place. So, I think the global scenario is difficult. I mean, I don't see a big crisis. I don't see a necessarily a meltdown. But you could have a bubble burst on the stock markets. And if it happens in a big way in the USA, it will happen everywhere else. So the stock market bubble, yes. But overall growth, if you say world growth is going to be 3.1 and will go down to 2.9, it's bearable for a year. Beyond that, let us see what Mr. Trump does in his next 3 years. We have no idea what he is going to do. As of now, most countries says we will adjust. We will adjust partly by, as you said, getting by exporting to Dubai and getting market diversion of various kinds. Partly by setting up factories in Mexico, shall we say, and that will assemble things and send it to the USA. Although already Mr. Trump has seen that's a loophole and has put new value addition conditions on the NAFTA agreement. But so it's going to be a little more difficult, but the world will cope. Even the IMF and other projections, they say this is the kind of thing that will come down. So it comes down from 3.2 to 3 or 2.9. It's not a good thing, but it is not a crisis. It's a difficult time, yes.
I do have a final question because you have been somebody who's seen through liberalization, globalization, backlash. So there was this concept that I came across, and I've written about it to an extent in the print, which is the divergent monetary policy. So I wasn't very privy to this concept earlier, which is basically when different central banks of the various economies start behaving differently at the exact same time. So if the Fed is hiking rates, the RBI might be either lowering the rates or keeping a neutral stance. Japan might be, they are at a sort of a near zero kind of a situation. The ECB might be moving very tactfully. So this was kind of a situation that was being created very recently. Now, what happens with divergent monetary policy situation is that it leads to a possibility of something called selective capital inflows, which is where certain economies stand to gain from it. This is from the basic reading that I got an idea from. And from the very brief idea, RBI maintaining a neutral stance or an accommodative stance, Vietnam and India stand to gain, if at all, selective capital inflows do take place. My question is a bit hypothetical. If tomorrow it does happen and India stands to gain, let's speak from the India picture, where do you think should we invest in? Should we put in those, the capital inflows?
You keep using the word we as though there is some great planning commission which does this. And Mr. Sumanberi, the Niti, I would be delighted to believe that he has the power to do these things. But the fact is, most of these things will be determined by the market. It will not be determined by central banks. And the markets will take into account a wide variety of things apart from the interest rates diverging in different places or inflation diverging. Many, many other things will come into play. I frankly am very skeptical of the ability of central banks to affect interest rates and even growth. I think it's hugely exaggerated, the idea that a cut of 0.25% will make very much difference to either inflation or growth. I am a little skeptical about all that. So I am not worried about what happened on this particular front.
Thank you. Mr. Aiyar, thank you so much for taking this time to speak to us today. We really appreciate it, and it was a great pleasure speaking with you today. Thank you so
Thank
much.
you.
Thank you.
Thank you.